president and Congress have their work cut out. Clearly, stocks are down in Asia and Europe this morning.
And back here in the U.S., Bank of America is getting ready to slash, we're being told, 30 to even 40,000 jobs. Joining us with more now, CBS News business and economics correspondent Rebecca Jarvis. Beck, good morning. When you look at those numbers, 30 to 40,000 jobs, even at the low end, that will have a major impact on this economy, which is doing everything it can to add jobs.
Yeah, and this is not something necessarily new. We're hearing from Bank of America. They've had troubles and they've had significant problems as a result of the mortgage crisis. But if you look at our economy overall, for the last 2 years, unemployment has been stuck around 9%. A number like this doesn't help things. Also of note is that the banks right now in the United States are in this precarious position. They are having their own issues right now because they're still under a lot of debt problems. And that's an issue for Americans because if banks are in trouble and they stop lending, and they have pulled back in a significant way on lending, but if they stop lending, that's a driver of growth in the economy, and that means fewer jobs going down the road.
We know the banking industry is getting pummeled these days. Anybody who is hiring right now?
Well, there are some sectors that have remained steady, and Erica and you and I have talked about this a lot over the last couple of years, in fact, and that is that healthcare has been significantly strong, manufacturing has been strong, and some of the business service jobs have remained stronger, but the construction jobs, those jobs in the housing market, have been some of the weakest, and government jobs also of late have been weak as well.
We talked a little bit about what we're seeing in foreign markets this morning. The headline in the New York Times this morning was market swings becoming the new standard.
Yeah.
What is going on with all this?
Well, what's scary about this is you have two new normals right now, at least for now. You have unemployment as the new normal, stuck at 9%, and then you have stocks, just incredible volatility in the markets. The Dow fell below 11,000 last week, and what we're seeing in the stock market is a reaction to two things. First of all, you have this weak jobs picture. That's on the table here. But in Europe, there are major concerns over their banks, and those concerns are what are really driving some of the significant volatility because places like Greece, for example, Italy, Portugal, Ireland, Spain, they are in so much trouble as far as their debts go that the banks in Europe who hold on to those debts are actually looking at potentially living out a similar scenario to Lehman Brothers here in the United States, and that's the concern because that's going to drive volatility for a long time.
We talk about the jobs market being stuck. We know the housing market is stuck as well. Despite these outrageously low mortgage rates right now, I mean, they continue going down.
Well, and this is the problem because you can bring mortgage rates down to 4.12%. That's what you could get for a 30-year fixed rate mortgage this week. The problem is people either are afraid to buy a home or they can't get the loan because they're not in a financial position to have the loan. And that's a problem because that's also going to keep job growth from being done.
A lot of folks saying until the housing market recovers, it's going to be...
And it hasn't yet.
It tends to, the housing market recovery tends to drive growth in jobs and the economy overall.
All right.
Thanks, Beck.